Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Tom Keene with David Gura and Bloomberg's Lisa Mateo. Lisa, quickly here, a selected stock look.
You got it. I want to start with Warner Brothers Discovery, ticker WBD. Their shares have been up as much as 8%. That's after yesterday's 29% rally. The reason why, sources saying David Ellison's Paramount Skydance planning a bid for the $71 billion company. So what a merger would do, it would shrink Hollywood's major legacy studios to 4, and it would unite some of the biggest names in news, movies, TV. That said, it could also face regulatory, financial, operational, investor hurdles, all of that, and possibly even interference from President Trump. So something David Ellison, he's used to. He spent 2 years trying to get his hands on Paramount Global before the takeover. Also, remember, Warner Brothers about to split into 2, right? One part owning streaming and studio operations, the other cable channels like TNT, but just something to think about on the consumer side. So this deal would mean less competition for streaming. When there's less competition, prices start to increase. So just keep that in mind. I want to take you to software maker Adobe, ticker ADBE. Their shares have been up nearly 3%. Strong quarterly revenue outlook boosted its annual forecast, heavily investing in AI features for products like its Photoshop that people are very familiar with. The AI features often based on its own generative models, but annual recurring revenue from AI-influenced products, it surpassed $5 billion, and that's what investors like because they were worried if Adobe would be able to make money from its AI from innovation. So this was a big good news for them. And it's facing a lot of competition from places like Canva and AI native tools like Midjourney. So it has a lot of competition. So that's on the upside, right? But I also want to hit the downside. That's luxury furniture retailer RH, whose shares have been down as much as 12%. Cut its revenue forecast for the year. It pointed to growing impacts from tariffs, a delay in its seasonal catalog. Its CEO said something interesting. He gave analysts some insight into what the industry needs to do to stay afloat. And he said, you know, we need to offer discounts because of the weak housing market. So RH has tried different things. They have a membership program, offers lower prices to those who pay a fee, a $200 annual fee. But I've known of RH, so I kind of checked on their website as to how high these prices really are. And if you look at the event dining table, it starts at $2,495. That's for the dining table. If you want one chair, it'll cost you about $1,150. So it's high prices. And the CEO is saying, you know, we may have to start taking this down a bit.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.